Global growth is likely to be slower in 2022, but we think that it will still be above trend. And above trend growth should allow equities to outperform bonds. Inflation is yet to peak, but we think it will decline over the year, and this means that any policy tightening by central banks will probably be modest. Hi, I'm Andrew Pease, and I'm the Global Head of Investment Strategy for Russell Investments. Welcome to our Global Market Outlook for 2022. 2021 was a year of rebound and recovery. 2022 is likely to be a year of moderation. Moderation in economic growth, moderation in inflation, and more moderate investment returns. We think the global economy can achieve a second year of above-trend growth. The growth is likely to be slower than in 2021. The three main uncertainties for 2022 are: what happens to inflation over the year, how much the Chinese economy slows because of the problems in the property market, and third, what happens next with COVID-19, particularly with the new Omicron variant. We think the spike in inflation is mostly transitory, although it could reach uncomfortably high levels early in 2022 before declining as supply-side issues are resolved. The situation in China is harder to predict. In the past, downside growth risks in China have been quickly countered by monetary and fiscal stimulus. China's leaders, however, are worried about too much debt in the property sector and have been concerned that speculation in the property market has made housing unaffordable for ordinary households. It's reasonable to assume that there will be some stimulus in the first half of 2022, and this should see China's growth improve towards the end of the year. COVID-19 refuses to disappear as a risk. We don't yet know the implications of the new Omicron variant, but it highlights the uncertainty that still exists around COVID-19 scenarios. Let's turn to our asset class preferences. The main conclusion from our cycle, value and sentiment investment decision-making process for 2022 is that equities should generate higher returns than government bonds. Equities should be supported by above-trend economic growth, solid profits growth, and central banks that are only slowly removing accommodation. These same factors will put upward pressure on government bond yields, but this should be modest, and we expect the 10-year US Treasury yield to finish the year at around 2%. In terms of other asset classes, the outlook for continued above-trend economic growth means that we still prefer cyclical exposure, such as cheaper value stocks, over more expensive technology and growth stocks. This means we also prefer global stocks over the US market. The rest of the world is overweight cyclical value stocks relative to the United States, which has a higher weight to technology stocks. This view didn't work in 2021, and the United States was the best performing equity market. However, it could succeed in 2022 as COVID-19 fears recede and a more normal cyclical recovery takes hold. Emerging markets face challenges from the China slowdown and inflation pressures that have seen a range of central banks and emerging economies raise interest rates. One positive is that emerging market equities are cheap relative to developed markets. Emerging market equities could do well if there is significant China stimulus early in the year, the Fed stays on hold, and the US dollar weakens. This scenario is possible, but otherwise emerging markets face headwinds heading into 2022. The US dollar has strengthened through 2021 on market expectations that Fed rate hikes are becoming more likely. It should weaken as investors realise that the Fed is likely to remain dovish as inflation risks decline. Dollar weakness should support the performance of non-US markets, which in particular will help offset some of the headwinds facing emerging markets. There are plenty of worry points for investors as we head into 2022. Inflation tops the list of concerns, but we think this will be mostly transitory, but it may not be apparent until the middle of the year. China is a significant downside risk to the global economy, and the new Omicron variant of COVID-19 adds to the near-term uncertainty. Despite these uncertainties, we expect that 2022 will be an above-trend year for the global economy, and this favours a positive view on equities over bonds. Thanks for watching. Enjoy the holiday period, and we'll talk again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.